Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9. Our morning briefing, we get everything you need to know in 90 seconds at 9 o'clock, starting now with news overnight that Warren Buffett has ridden to the rescue again. This time he's buying $3 billion worth of preference shares in General Electric, and he's going to get paid 10% for the privilege. General Electric are a huge conglomerate. They own aircraft engine makers, power systems makers, own a huge financial services group and a bunch of other things. And just in the last couple of days, there's been some fears that they haven't been able to raise the money they need on capital markets to keep lending in their financial services business. Well, General Electric have come out and said they're going to raise $12 billion through a share issue, and Warren Buffett will be the key investor. Remember last week, Warren Buffett bought $5 billion worth of shares in Goldman Sachs. Again, preference shares with a 10% interest rate. He's doing very well there. The Dow was down sharply on these GE fears, but when Buffett came in, it bounced up again. It's currently down about 50 points. Problem here for GE, it's credit default swap spread. So this is the measure of how risky it is in the eyes of lenders. That rose to 7.4%, and for a AAA rated borrower, that's quite incredible. So the credit markets are really frozen. Everyone now is watching what happens in the Senate later today, where they will vote on a revised package with a $250,000 deposit insurance scheme, up from $100,000. And there is talk now that Europe will create its own bailout fund, about 300 billion euros. That's according to France, at least. How is this affecting us here? Well, yesterday it became clear that PGG Wrightson's deal to buy Silver Fern Farms was ankle-tapped at the last minute by nervous banks because of this credit turmoil. Credit markets are really frozen. Key thing for New Zealand, our banks have about $85 billion worth of foreign debt, which rolls over every 90 days. So at some stage in the next 90 days, they will have to refinance that. It may be at much higher interest rates than before, and that in theory will be passed on to us in higher fixed mortgage rates and also lending costs for businesses. I'm Bernard Hickey, that was 90 at 9 for interest.co.nz.